I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, July 7th. We saw a lot of volatility in the grain markets. We spent much of yesterday's session in corn lock limit, so we didn't get a lot of action. We were expecting to see some follow through to the sell side last night and this morning, but last night's open held actually pretty darn well. Crop progress maybe was a little bit more supportive than some were expecting, but nonetheless, we didn't fall out of bed. We did see some weakness shortly after the floor opened this morning, brought us down to the 100-day and trend line support. We tested and held that. We like being buyers down here on the first test. So long as we can continue to defend this, we think there's opportunity to the upside. We really want to see the market get back out above today's highs and those highs from yesterday's session as well. So basically 545 to 550. If we can do that, I think we start to see a little bit more short covering into this gap that was left from last week. I'm not saying we got to go fill that whole gap at once, but I do think that we will make our way up in here. So we're a little bit more bullish here in the very near term. Now, with that said, a retest and a break and close below these lows here in trendline support and 100-day moving average. So take your medicine and kind of wait for the dust to settle, and we'll move on and wait for the next trade. Now, moving over to the soybean market, we're a little bit more optimistic on longer term. We think there's a good fundamental backdrop. This is a tech talk, so we're going to focus on the technicals. We tested the 100-day moving average today. Managed to defend that. We didn't quite get down to trendline support, but we still like being buyers in this pocket between trendline support and the 100-day moving average. Again, a break and close below there would probably neutralize our near-term bias, but so long as we can defend that, we think that we can start to recover some of the losses that we're seeing in yesterday's session, potentially make our way up towards that $14 handle to fill the gap. And this kind of looking at these trading ranges, they're absolutely insane. So position sizing and risk management is very key in this environment. We've got the 14-day ATR, the average true range, at 48.25 cents. And for corn, if you go back and look at that, we're at 28 and 3/8 cent for the average true range. Those are insane numbers that don't come along too often and typically don't stick. But we have seen this volatility just continue to grind higher here over the last several months. At some point that will start to fizzle out, but we are kind of in the middle of a weather market and obviously a lot going on the supply and demand side as well. So the volatility likely to continue in the very near term, especially with the USDA report right around the corner next week. Now, wrapping things up with the live cattle market, a little bit of a pullback here today. We've got the December contract pulled up. That's one that we've been keeping a very close eye on. We've talked about the bullish seasonal for December live cattle. It was profitable 15 out of the last 15 years. Yesterday was the exit, so it's now profitable 16 out of the last 16 years. I think this year was a $1.75. The 15-year average was a gain of 220, so right in line with expectations. Nonetheless, pulled back here after that, which maybe not be all that surprising. After the seasonal is over, you get a little selling pressure. Pulled back to trendline support. We're still optimistic on December live cattle on a longer-term basis, but again, looking at the technicals, a break and close below the trend line could encourage a little bit more long liquidation, but as it stands right now, the path of least resistance does look to be higher. So if that's what we're looking at, that's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.